Right, hi guys, Zaheer Anwari here on behalf of the Dynamic Trader. Can I get a quick, the dynamictrader.com, can I get a quick hello in the chat box that you can hear me and you can see my screen as well. Right, hi guys, brilliant. Okay, and you can see my screen as well. Yeah, okay, fantastic. Okay, brilliant. I hope you're all well. I hope you've all had a good week so far. 2017 has suddenly come alive, both in the foreign exchange market and the stock market. One of the skills that I talk about on a regular basis in my webinars is, as a trader, one of the skills a trader should have is the application of patience, waiting for the opportunities to arise, and then once the opportunities arise, act accordingly, have the right strategy for the right market conditions. Trading is an art with its own unique set of skills. This is something that is really, really important and something that you guys must learn and must appreciate, that trading is an art with its own set of skills. You guys may be successful business people, you may be good at maths, you may be up to date with what's going on in politics and economics, etc., etc. But when it boils down to it, none of them matters at all if you can't think in terms of what a trader should be thinking, i.e. thinking in high probability environments, thinking in terms of risk to reward, understanding patience, understanding how to manage a watch list, identify where the money is. These are all the skills of a trader. These skills are often overlooked. 2017 is now looking very, very interesting. And if you miss out on these opportunities that are presenting themselves, you're going to kick yourself, because money is made in periods. It's not like a 9 to 5. Most people believe money is made like a 9 to 5. Day trading. That's why they're sat in front of their screen all day chasing pips. It's not how money's made. That's not how the best traders and investors over the last many decades have made money. They make money in periods. Look at Warren Buffett. He does the same thing. So you've got to take advantage of the movement in the markets when they appear. We're going to look at some of these movements today and look at the currencies that I'm in, some of the stocks that I'm looking at as well. Many of the concepts that I go through are all explained in this ebook. I know a few of you guys have this ebook. I've been inundated with emails regarding this ebook, and it's really changing the way people are thinking. A lot of positive feedback on this ebook. You go on the internet and there is a lot of bad information, a lot of misleading information out there on the way trading should be done for us as private traders. Remember, guys, we are private traders. We're not institutional traders. Institutional traders have rules and regulations to play by, government rules and regulations. In addition, they have millions of pounds to trade with, if not billions to trade with. You are a private trader. I am a private trader. We don't have the funds of an institution. We don't have rules and regulations. In addition, we don't pay thousands of pounds on a monthly basis to get news early. We have to act and think and approach the markets very, very differently. This ebook should be the Bible for you as a private trader. As private traders, we have to be able to create our own rules and regulations. Most private traders are not good at this. They're not good at creating these rules, and they're not good at following them. This ebook will start helping you establish that. As you can see, it's a loaded ebook. It starts with the trading bias and it goes all the way through to a trading plan. This ebook is totally free. To get hold of this ebook, email me on zaheer@zaheeranwari.com. It's just my name, zaheer@zaheeranwari.com. Totally free ebook. I'm emailing this out to people. It's written by an amazing woman called Anne Chapman. This is the lady that taught me how to trade back in 2007. If I just scroll down just so that you get a feel for the book, you can see it comes with diagrams, explanations, examples. It's just a beautifully written ebook, and it's about 60 pages long. Lots and lots of information in here. Okay, so please email me, guys, zaheer@zaheeranwari.com. Please put FX Street webinar in the title so I know where you've come from, in the subject title, and I will have this over to you. Okay. Let's move on. Let's get into the charts. Let's do a bit of analysis. So I'm just going to share the screen, and I'm just going to ask administrator to give me confirmation that you can see my charts. Oh, please share the page. I can see now the chat screen. Ah, okay, so you couldn't see the ebook before? Is that what you're saying? Okay, so I'm assuming now you can see the ebook. Can you see the ebook right now? It's quite a difficult platform to get your head around. Yeah, okay, fantastic. All right, so guys, yeah, so this is the ebook. As you can see, trading bias. This is the contents page, 12 chapters, examples, etc., etc. And you can see if I scroll down, plenty of diagrams and explanations, and it's a good 60 pages long. Okay, so this is what I'm emailing out to people. Zaheer@zaheeranwari.com. Okay, so let me now try and bring up my charts. Bear with me 1 second. Okay, so administrator, can you see my charts, please? Ah, fantastic. Okay, brilliant. Okay, so let's go ahead. Let's go ahead and do some analysis. Okay, so just a brief background of myself. I'm a long-term trend trader, so I'm not a day trader. I'm not a scalper. I'm effectively looking for trends in the market that can stay in play for weeks and months at a time. This is the way you want to be thinking. Think long-term. Think like a business. I often tell people that the time frame you trade on will generally give you an idea of how long your trading career will last. If you're trading on the 5-minute time frame, all the best to you. What you really want to be doing is moving away from the lower time frames. You're only feeding brokers on the lower time frames with all of these trades that you're taking. What you have to do is to do the right things. You don't want to ignore doing the right things in pursuit of quick money and quick riches. There's no such thing as a get-rich-quick scheme. Unless you're blessed enough to win the lottery, there's no such thing as a get-rich-quick scheme. Trading will make you wealthy. It's not going to happen overnight. It takes time. It takes funding. It takes money. You've got to understand trends. You've got to understand compound growth. You've got to understand your environments, what strategy to use. There's a lot of that goes into it. It's all very simple. It's one thing that I really must get across to you guys. It's all very, very simple, but you have to go through that initial education phase, which can take, 3 to 6 months. Once you get it, it can be plain sailing going forward. So as a trend trader, I need to have the time frames to do that. So on the top left corner, I have the watch list, extensive watch list. Aussie dollar, US dollar at the top, all the way down to the South African rand, Japanese yen at the bottom. Monthly chart is where I look for support and resistance. These red and green lines are all based on major pivots. These pink lines are the annual levels of the previous calendar year. So that's the high of 2016, the low of 2016, the closing price of 2016, as we are now in 2017. What I really want to be seeing is price trading outside of these pink lines. And now, the one thing to note is that I give price at least 1 month to react to the pink lines. So I don't look at the pink lines from January to January. I look at the pink lines from February to February. So as we're still in January, I'm ignoring the 2016 levels. I'm still looking at the 2015 levels. Okay, but either way, we can see that price is still trading inside the pink lines, either the 2015 or the 2016 levels. What I want is to see price trading outside of these levels, so either above the high for a bullish bias or below the low for a bearish bias. As I said at the very beginning, you need to start thinking in terms of high probability environments. If the market is not favorable, you stand aside. If the market is favorable, you enter based on your trading plan, based on your strategy. You need to have a big watch list to move between pairs that are trending and pairs that are consolidating. If you're only looking at the euro dollar, if you're only looking at gold, if you're only looking at the stock of Apple, you're limited because you're only looking at one instrument. And what this means then is it will lead to over trading, because a lot of the times those instruments aren't liquid. The euro dollar is not always liquid. In fact, it's not been liquid for the last 2 years. It's been stuck in an area of consolidation since March of 2015. I'll cover this in a second. Being able to manage a watch list is part and parcel of trading. I'm going to direct you guys to my blog site at the end of this webinar that will explain to you how to manage your watch list. There's a lot of useful blogs on my site, which I will direct you guys to in a second. Okay, the weekly and the daily. The weekly has the 200 moving average. The daily has the 200 moving average. What I'm looking for is price to be trading below both moving averages in a bearish bias and above both moving averages in a bullish bias. If I don't have that alignment, I stand aside. So if the weekly is above the weekly 200 and below the daily 200, I stand aside. I want to see price moving above both the moving averages in a bullish, but to have a bullish bias where I look for long opportunities, and below both moving averages for price to have a bearish bias and for shorting opportunities. Now, one thing to note is that the logic of the 200 moving average comes from before the internet, when charts were drawn by hand. Old school traders were very selective with the information they put on their charts. The 200 moving average was a proven indicator of the long-term trend. Institutions use that today. So as private traders, we must use that. If you look at a lot of charts for a lot of private traders, it's a real mess. It looks like a dog's dinner. You have Fibonacci levels, Fibonacci extension, Fibonacci retracement. There'll be trend lines, there'll be channels, there'll be RSI, stochastic, MACD, there'll be pivots, there'll be just a whole manner of different things highlighted on there. And underneath there somewhere is price. 99% of technical indicators are lagging. That means they follow price. So why would you clutter your screen with lagging indicators when price should be your primary indicator to tell you what price is going to do next? There is no better indicator. If I wanted to know what you are going to do next, I'd ask you. I wouldn't ask your mum. Maybe your mum may know you better, as mums tend to claim they always know their son or their daughter better. But the reality is, if I wanted to know what you are going to do next, I'd ask you. So you have to look at price in the same way. There's no point looking at fibs to try and figure out what price is going to do next when price can dictate that. In addition to that, I have the proprietary trend filter. So what I'm looking for is the trend filter to be red on the weekly and red on the daily. That is alignment in the trend. If I have green on the weekly and red on the daily, then there is the alignment is out of sync. So in a bearish market, I want to see the trend filter red on both time frames, and in a bullish market, I want to see the trend filter green on both time frames. Okay, so if we look at the Aussie dollar, US dollar, it's very much in consolidation. It's inside the pink lines. It's just not a good looking chart, and it's not one that I would recommend trading. Below the weekly 200, trend filter is red. Below the daily 200, trend filter is red. So the weekly and the daily are looking interesting. They have alignment between the moving averages and the trend filter, but because it's inside the pink lines, I'm not interested in trading this. And we can see very clearly that the monthly is in consolidation. Just so that you are unclear, this is a trend. This here is a trend. This is a consolidation. If you can't see that, then you really need to go back to basics, because there'll be people here going, yeah, but you know, there's trends on lower time frames. Yeah, okay, there may be trends on lower time frames, and I understand that. If you go into a shop and you pay £2,000 for an item of clothing, let it be a tailor-made suit, you go in and pay £2,000 for that tailor-made suit, only for an hour later to be told that that suit is no longer in fashion, you're not going to be too happy. It's the same thing with trading. You want to view trading in the same way. You want trends that last for long periods of time. Fashion, minimum is 3 months, because fashion is seasonal. But we often talk about fashion as a period, decades, 60s, 70s fashion. Look at beards. They've been around for quite a number of years now. So you've got to think long term. Okay, so let's have a look at some of the currencies that are looking interesting. So let's have a look at the euro dollar. So here is a trend, and this is the last time I traded the euro dollar. 1.4 round number to 1.1, showing the significance of round numbers. Price doesn't just fail at random levels. If you look at the highest point here, 1.6 round number. If you look at these two pivots, 1.5. If you look at this level here, 1.4. If you look at the support level, this consolidation zone, 1.1. Remember, these are zonal areas. They're not hard levels, hence why it's oscillating around 1.1. It's a zonal area. What we're now looking for is this momentum to continue to the downside. The trend was bearish prior to consolidation, so we want that to continue. consolidation, and we want the breakout of consolidation to be to the downside. If it breaks this support zone, then price will move towards 1, 0.9, 0.8. If you go back to 2000, that's the low point here. So you can see how significant round numbers are. What we now need to do is simply wait. We need to wait for the breakout. You don't want to anticipate or guess the breakout. Let price dictate the breakout. If we go to the weekly, below the weekly, trend filter is red. Below the daily, trend filter is red. If we look at what's happening, price is struggling. We're seeing weakness. We've seen good move to the downside today. Price is struggling around this level. Why is price struggling around this level? Well, if we compress it, if I just get my support and resistance tool, if I just plot the support, that support level, which is March 2015, which I mentioned, you can see that price is struggling around this area. We had a break and then a fake breakout. Price went back in, and it's now looking to go again. And this is all part and parcel of trading, where you have to apply patience. A lot of people would have lost a lot of money around here, going in early, going in intraday. When a market has been in consolidation for this long, you want to wait for a breakout and a trend to establish itself first, and then enter short positions. You don't want to get in too early. This concept of how to apply a filter to breakouts, to avoid fake breakouts, there's a filter that you can use, which is the 60-day filter. It's explained in the ebook. So if you email me again regarding that ebook on Zaheer@ZaheerAnwari.com, there is a 60-day filter in there that explains to you how to avoid getting caught up in fake breakouts. So excuse me, let me reword that. How to reduce the chances. You can't avoid it totally, but you can drastically reduce the chances of getting caught up in a fake breakout. Okay, so euro dollar, it's looking interesting, but until it breaks this support level, it's not a trade that I want to be getting into. Okay, let's have a look at the euro Canadian dollar. So the euro Canadian dollar is one that I am looking to potentially enter short positions on. If you see, price is below 1.4, round number. Now, sometimes you have to be a little bit dynamic. If price is trading inside the pink lines, but you have a trend, then you reduce your risk. If price is trading outside of the pink lines, then you can allocate a full 2%. If it's inside the pink lines, you may want to reduce your risk. So if price continues to weaken and we have around 1,000 pips towards 1.3, this may be a trading opportunity. Below the weekly 200, trend filter is red. Below the daily 200, trend filter is red. So looking interesting. If you have a look, if I get my support and resistance tool, we got a support level right there from December. Price is now below 1.4, the round number. So looking interesting. There is real life coming in the market right now, guys, and you've got to be ready to act. Okay, let's have a look at the euro pound. Okay, so euro pound, very much in a bullish trend. We had a correction to a support zone, and we're now seeing price bounce back to the upside. It's faced with resistance, and resistance at 0.9, and this resistance here. So if you do look to take any long opportunities, be aware of resistance ahead. Above the weekly 200, trend filter is green. Above the daily 200, trend filter is now green. But you can see support level here, price is struggling to break through that. If it breaks above it, then we could see price move towards 0.9. If it clears that, we've got the next resistance level here. If it clears that, then we could see price move towards 1. So one to keep an eye out on, but I don't necessarily think the euro pound is the most interesting looking of the pound currencies. Right, let's have a look at what's going on the pound dollar. Now, I am already short on the pound dollar, and I'll explain why. Let's have a look first at where the trend is very much bearish. 1.7 resistance, we can see that it's been weakening. Price came towards 1.5, half figure, bounced to the upside, came towards 1.6, round number, next move down. Came towards 1.4, round number, bounced up, came towards 1.5, zonal area acting as resistance, next leg down. A very, very good example of how price reacts to round numbers, these psychological levels. The distance between round numbers is 1,000 pips. If you look at the highest point on the chart, 2.1, round number. If you look at this whole area here, 2, figure 2, round number. Price doesn't just stop at random levels. If you are to ever achieve success in trading, if you are ever to achieve consistent growth and to grow a trading account and to eventually be in a position of empowerment where you can walk away from your job, if you are to ever achieve that, then you need to start understanding how to read price and how to embrace price. And this is on the larger time frames. If you don't do that, you will always fall short. And one of the biggest, I don't know if you ever seen that documentary, I think it's on YouTube. And this woman, this nurse, I think it's a nurse, I can't remember, she interviews people that are dying. And they all look back on their life. And the one thing that they all look back on is with regret. It's too late by then. You are in a position of choice going forward where you can actually do the right things. You have time on your hands. So you have to make sure that going forward, you're doing all the right things. You never want to look back in regret. You have time to act. If you don't embrace price, you're not going to achieve results. Below the weekly 200, trend filter is red. Now we've got a support level right here that we need to see price break through and around number 1.2. So again, it breaks through this level. Then where is price going to move towards? Well, if I open up the monthly chart again, 1, which is the low of 1985. Now, if you listen to the news, if you listen to the media, if you listen to any of that, they will always say, oh, the pound will never go that low. They said it at 1.5. They said it at 1.4. They said it at 1.3. They said it at 1.2. When there was this little bounce at 1.2 because of the results of the US elections, suddenly the pound was going to rally. Not anymore. It looks like it's going to break and potentially go towards 1.1 and 1. Ignore the news. Ignore what's happening out there. Focus on what the charts are telling you. The charts are the truth. Look at the daily. Below the daily 200, trend filter is red. I have been short from around this level here based on a pullback strategy. So you have to learn to be dynamic. When my trend filter is different, so you can see here, that same period on the weekly, my trend filter is red, but on the weekly, on the daily, the trend filter is green. So when price pulls back to a significant level of support or resistance and the trend filters are not the same color, that doesn't necessarily mean that I don't enter the trade. What it means is that I may need to use a pullback. This is what I mean by understanding what markets you're in, being dynamic and then using the right strategy. Sometimes you have to use pullbacks, sometimes you have to use breakouts. So I've entered on the pound dollar back in December on the breakout, on the pullback around this level, and this is now in very good profit. If it breaks through this support, which it looks like it is likely to do, then I will add more positions. I'll start compounding. I'm also short on the pound Aussie dollar. See again, round number 2.3, weakness to the downside, price came towards 1.6, bounced to the upside 1.7, and is now suggesting further weakness. We'd move with space towards 1.5 and this support level here, which is around 1.4. Below the weekly 200, trend filter is red. Below the daily 200, trend filter is red. I have been short since around this level here, and we can see now further weakness to the downside. If price breaks through this support zone, which it looks like it may do, then the next level of support is around here. If it breaks through and around number 1.6, I may add. If it breaks through this support zone, then we can start looking to add further positions. Pound New Zealand dollar, another currency that I'm short on. So if we look at the pound New Zealand dollar, we can see that price is trading below the all-time low. So this was the all-time low. We can see that price is now below that. After every break, price likes to retest, and on the retest of that low, I then went in on a pullback. I'll explain more in a second. Below the weekly 200, trend filter is red, so everything is suggesting bearishness. Below the daily 200, trend filter is red. Now, if we go back to this period here, you can see the pullback, trend filter turned green. So when price came back to this resistance, trend filter on the weekly was still red, but my trend filter on the daily had turned to green. And that's when I entered a short position on the pullback. Now, this is the thing. When people get into a trade, what they expect is instant gratification. Remember, a good trade is one where you follow your trading plan regardless of the outcome. At the time when I took this trade, which was here, I had no idea of what the market was going to do next. Now, when you enter in on a pullback, first of all, you need to be good at understanding price structure. So don't fall into the trap of thinking that pullbacks are the way to learn. You want to learn how to trade breakouts first, because breakouts confirm the trend. When you get good at identifying breakouts and trend structure, you then want to start learning how to use pullbacks. Focus on breakouts first, but always be open to good pullbacks. So if we have a look, we had a pullback here. Now, the downside to trading in a pullback is that, of course, the market could continue going against you if it triggers you in, or you may get stuck in an area of consolidation. And that's exactly what's happened. I've been stuck in this trend since November. There's a very small risk on the table. It's like 0.5%. But trading is all about risk to reward. So this 0.5% risk has the potential to return me a lot more reward if price continues to weaken. My stop loss was just above 1.8, and you can see that I haven't been stopped out, and now price is looking to weaken further. We do have a support level here, and we can see that price is now trading below that, which is now resistance. And if this continues to weaken, we've got 1.7 here, we've got a support level here, and we've got another support level here. So this pivot low is cleared, price will then potentially free fall towards 1.5 and 1.4, etc., etc. So pound New Zealand dollar is a currency that I'm short on as well. Now, the currency that is doing really well for me at the moment is actually I'll come to that in a second. Let's have a look at the Swedish Krona, because the Swedish Krona is a currency that I profited very nicely from. And you can see here, after every move, the market consolidates, and we've had another move to the upside. Now, what we're waiting for is price to break through this high point. You can see that it's tried. Just open the chart. See that price tried and failed, and that's expected. The first time price tries to push through a resistance level, you have all these traders trying to predict the top of trends or trying to come in short with price just bouncing off resistance. It's a very short-lived way of trading. The strength is always in the direction of the trend. You just need to apply patience here. Wait for price to break out, and then look for price to move towards 10 and then 11, 12, etc. If you go back to 2001, you can see that this was the highest point on the chart, which was 11, a round number. Weekly, above the weekly 200, trend filter is green. Above the daily 200, trend filter is now red. I have not entered any positions on here, and that is because the pullback is not so clean. You can see it's now just more in an area of consolidation rather than a clean pullback. So this is not one that I would want to get into just as yet. In addition, it's faced with a resistance directly above it. If I just compress the daily chart, if I just compress the daily chart, and if I click on that point there, you can see that price, again, fake breakout, broke above it, reversed back to, and is now testing the round number 9 support level. There's hardly any space between entering here and this resistance zone. Think in terms of risk to reward. I want to see price be able to move at least 3 times the risk for me to take the trade. Based on this space, I would barely be able to make 1, if 2. So this is not a trade that I would look to take until it clears this whole resistance zone. So we've got another resistance level here. If it clears this, I will then look to take some short, long opportunities. Okay, so on the watch list, but not one that I'm looking to trade just as yet. Now, the US dollar Turkish Lira. I've visited this pretty much every week since I've been doing these webinars over the last few weeks. Apart from a little break over the Christmas period, I've been visiting the Turkish Lira consistently, week in, week out. Long period of consolidation. The bigger the consolidation, the bigger the breakout. And you can see, if you go back to 2001, that's the consolidation. We had a breakout in 2013. It's now in trend. But look at where these periods of consolidation are. So this pullback, round number 2. Consolidation, round number 3. So where is price right now? It is just short of the round number 4. And I had mentioned that if price breaks through this resistance and it starts continuing, it's likely to move towards 4. Now, there's a very good chance that this may consolidate around this round number based on what price is doing. Consolidation, consolidation. This may consolidate again. However, I'm not going to anticipate the consolidation. my bias is always in the direction of the trend. Until this actually dictates a consolidation, I want price to continue. And I would like to see price move towards 5. If it clears 5, 6, 7, 8, 9, and 10. If you look at the weekly, above the weekly 200, trend filter is green. And if you look at the daily, above the daily 200, trend filter is green. Now look at the way this is moving, guys. Look how quickly it's moving. There's hardly any pullbacks apart from this period here. There's no pullbacks in this trend. It's just continuously going. Look at this move here. It's just continuously going. There's no pullbacks. It's a very, very fast moving trend. It's now just short of the round number 4. What we want is a continuation, a break and close above it. And I will then start compounding further. I think I have 2 or 3 positions. I can't remember. I've got a few positions running along this trend. I will look to compound further. Couple more Turkish Lira currencies that I've got my eye out on. So Euro Turkish Lira, quite choppy. So not the neatest of looking trends. However, we can see moving forward, this potentially could end up being quite a profitable trend if it avoids these choppy periods. Remember, that's all part and parcel of trading, watch list management, portfolio management, choosing the right currency. Do you really want to trade something that has a very choppy history? If this continues in the way it's continuing, which is quite a fast moving trend, then this may be one to keep an eye out on. Round number 4 is now trading above it, so this is support. Above the weekly 200, trend filter is green. Above the daily 200, trend filter is green. So we have alignment across the board. In addition, we're now above the round number, which was resistance, which is now acting as support. So what we'd like to see, ideally, is a pullback to retest this level, and then the next move up. Until that actually happens, you want to be standing aside. Don't get in too early. Okay, another currency I'm keeping an eye out on is the Turkish Lira Japanese Yen. Much better looking currency. You can see how it's weakening to the downside. It's now trading below 30. It's below the pink lines of 2015 and 2016. Below the weekly 200, trend filter is red. Below the daily 200, trend filter is red. So if we have a look, we can see price is trading below this support level, which is now resistance. And it's still yet to confirm this, but it's currently trading below 30. So if we get a break and a close below 30, then this may be a sign of a continuation. Okay, so Turkish Lira currencies are all pretty much on my watch list, as well as the pound currencies. So really then looking to pick off the best of the best opportunities and then repeatedly compound into them. Okay, in terms of stocks, we have a look at the Dow. We can see that the Dow is still struggling to break through 20,000. If it does, this is very significant. One thing to be aware of, guys, is that every market has its own unique features. A chart is a chart. I got an email today from a gentleman who's learning to trade, or who wants to learn to trade. He wants me to train him, and in his email he states, I'm more comfortable with foreign exchange. I don't like stocks. It's just a lack of understanding. If I gave you a chart and I did not show you the symbol, so you didn't know whether it was a stock or a commodity or currency, you had no clue what it was, you would look at that chart and you would then analyze it as you guys know how to analyze charts. You wouldn't say, oh, I don't know what to do because I don't know what stock this is or what stock. You would look at what price is suggesting, you would use your indicators that you do, and you would try and make a decision on it. Just because there's a name attached to it, suddenly people then become, oh, that's a stock, I don't know what I'm doing. A chart is a chart. However, each market has its own unique features. For example, foreign exchange, because it's paired, currencies are cyclic. Let me give you an example of that. So if you look at something like the US dollar Japanese yen, if I open up the monthly chart, you can see for yourself, look how cyclic the movement is. It goes down, it goes up, it goes down, it goes up. So very cyclic. It goes down again, it's gone back up again. It's down, it's going up again. Very, very clear example of how currencies have a very cyclic nature to them. If you look at stocks, stocks tend to go up very slowly and then come crashing down, hence why they call it a stock market crash. 2002, 2003 to 2008, 2009, bull run. and then all of that outdone in a single year. But look at this next run, 2009 to 2015. That's another 6-year run, a consolidation. So we're now potentially seeing the start of another bull run. If it breaks 20,000, that will be significant. If we look at the Nasdaq is already trading above 5,000. It's not only trading above the 2,000 high, it's also trading above 5,000. So very, very interesting looking potentials in the stock market going forward. S&P 500 as well. S&P 500 is just going for a bit of a mini consolidation. And that's because really the market is really looking to decide on a direction. The odds are very much with the bulls. In addition to that, if you do look at stocks, guys, be aware of, excuse me, can I grab some water? Okay, apologies for that. Just be aware that we are approaching earnings season. So you really don't want to be trading stocks at least 2 weeks before earnings. Okay, you want to be applying a bit of patience and then letting earnings come out and then make a decision. Just a quick review of Nvidia. So Nvidia is the stock, my best performing stock of 2016. It is without a doubt the best performing chart of 2016, along with Boohoo, which is a UK stock. I'm sure some of you guys know about Boohoo. It's a UK online clothing company. You can see how it's done very, very well. Compare it to the euro dollar. Most people are trading the euro dollar. It's done nothing for almost 2 years. While people are struggling and stressed out and losing and blowing accounts on the euro dollar, Boohoo and Nvidia have handed out significant profit. This is part and parcel of trading. Risk, not only risk management, etc., but watch list and portfolio management. It's really, really important. So going back to Nvidia, so you can see it's above $100. If this holds, then we're going to see a continuation. Above the weekly 200, trend filter is green. Above the daily 200, trend filter is green. So everything is suggesting strength. My stop loss is just below $100. So if this weakens now and breaks and closes below $100, depending on the size of the bar, I'll get stopped out. But I've got positions running from just above $40. So these positions are all very, very in very good profit. And I mean significant profit, guys. It's the kind of profit that no banking system, no institution, no hedge fund would ever get you. Day trading, scalping is the kind of profit that can only be achieved by holding and compounding. Okay. On that note, I think we will end the webinar there. I'm just going to direct you guys. Okay, sorry, I'm just looking at some of your questions. I love your rule-based posture. Thanks, Afex Ambassador. Pound is reversing. I don't know what you mean, Himu. Pound is reversing. Pound is reversing where? To the upside, to the downside. If you think the pound is going long, then you've obviously missed the whole point of today's webinar, because if you think the pound is reversing, first of all, you've got an opinion. In trading, never have opinions. Don't think. Let price dictate. It's opinions that get you burnt. That's the first thing. Secondly, the trend has been down since 1.7 going back to 2014. So it makes no sense to say that the pound is reversing. And if you're saying the pound is reversing based on just this little bar, if you look at if I compress the chart, that's 1.7 going back to 2014. And you are saying that the pound is reversing on this little tiny bar down here. I think this should put it into perspective, what you're looking at in terms of what is reversing and what the market is actually doing. And this is why private traders get burned, because they have an opinion. Everyone thinks they're an expert. Everyone is just basing their decisions off free information that they're finding on the internet. They're using free software. They have no clue or idea what they're doing. If you it's very ego driven, and I get that, because you're making money for money, and you can go and open a broken account. You can put in whatever money you want, which is usually £100, £200. Most private traders aren't even funding their account properly. And then after a few winning trades, everyone claims to be an expert, and it's a very incorrect approach. Be humble, be open, understand that there are things that you probably don't know. And there's a very good chance that if you're attending FX Street webinars, then there are things that you want to learn and your account is not growing the way you want it to. I could be totally wrong. That's for you to be honest with yourself and decide. But if you're saying that the pound is reversing based on that, then yeah, no, doesn't make sense. How much is rollover over this pay? Sandy, I use future contracts, so I don't have to, I don't pay rollover charges, and I would look at rollover charges as a cost of running a business. If it's rollover charges that are stopping you from taking trades, then again, you'll never take trades and you'll never hold positions and you'll always be day trading and you'll be feeding the broker through spreads and commission. Let's say you made £1,000 on going long on the US dollar Turkish lira. Let's say you made £1,000. Out of that £1,000, you would probably give away £100 or less in rollover charges. Are you saying that out of £1,000, you're not happy to give away £100 in rollovers? So you have to look at trading as a business, and every business has a cost. Broker charges are a cost. They don't have to be massively expensive, by the way. Okay, you don't have to pay very high costs to running a business in terms of trading, but there are always costs. The way with rollover charges is this, not rollover charges, with future contracts. If you have 3 monthly contracts like I do with future contracts, I pay a more expensive spread, but every 3 months it just rolls over. So I pay the more expensive spread, but then I don't pay anything else for 3 months. Why are you so aggressive? I don't know where you've got that from. Another time. Are you trading any longs? What do you mean by longs? So US dollar Turkish lira, I'm long. Some of the stocks, definitely I'm long on. Okay. All right, guys. Right, so let me just direct you to... my social media sites. Okay, so beyond this, if you want training, guys, tdtpro.trade, please check out this following website. It's £99 plus VAT if you're in the EU. It's £99 plus VAT for a whole month of training. So if you take the ebook and you want an environment to put that into practice, software, strategies, watch lists, training in FX and stocks, a breakout strategy, a pullback strategy, weekly webinars, there's just a lot that goes into it. Excellent value. £99 for a whole month of training. Please check out the following website. This is the blog site that I wanted to direct you to. So if you go to medium.com, if you're not aware of Medium, it's owned by Twitter. So medium.com, just search for me at Zaheer Anwari. And I've got a lot of blogs on here. So my last one was on the pound and pound currencies. But more importantly, you may want to read blogs like this, A Fresh Start to Trading in 2017, Manage a Watch List. So this was what I wanted to talk to you about earlier, which was how to manage a watch list. There's a blog there. This is Nvidia, how I traded it, my thoughts on gold. And this one you guys will find quite interesting as well. Learn to trading like a puzzle. Know the differences between technical analysis and trading. Often technical analysis and trading are made out to be the same thing. They're not. Technical analysis is breaking down a chart. Trading is extracting profit from the market. So they go hand in hand. Don't mistake the two of them. So please check out my blogs. It's again totally free. Just jump on there and you can leave comments, etc. If you are on LinkedIn, please follow me on LinkedIn, or please connect with me on LinkedIn. Facebook as well. You can connect with me on Facebook. I have a Facebook page as well. City Trader Lifestyle, please connect with me there. Yeah, and once again, if you want the ebook, Zaheer at zaheeranwari.com. Sorry, how do you trade US dollar Turkish futures? It depends on the broker that you're using. So if you're using something like FXCM, then you'll have daily funded bets where you pay a rollover charge every single day and a cheap spread. Whereas if you're using a broker like IG, you pay a more expensive spread but you don't pay rollover charges every single day. So it really depends on the broker that you're using. Sandy, if you get in touch with me, Zaheer at zaheeranwari.com, I can then be able to direct you better on brokers, etc. I don't really like to talk about brokers because I'm not affiliated to them, I'm not associated with them, but I can direct you on maybe more suitable broker accounts for you. Okay, yeah, no worries, Sandy. Okay, brilliant, guys. Administrator, thank you for today, guys. All the best for the rest of the week. Be smart, be safe, and see you all on next week's webinar. Do you think the AU is now a good bet? I don't bet, I trade. And if you watch the replay, the first currency I look at is the Aussie dollar, US dollar. Okay, right, guys, take care. See you all. Bye bye.